Indian currency is concerned. In fact, rupee continues with its free fall. It's continuously sliding. Remember, it had hit an all-time low yesterday. It's gone even further down. It's hit an all-time low yet again this morning. In fact, now it's trading at a figure of 56.28 rupees against the dollar. In fact, this time around, the kind of slide that we're talking about here is almost like 27 paise against the dollar. Remember, as far as the closing figures yesterday that had come in are concerned, the rupee had closed at 56.01 on Wednesday. Well, that's the news we're breaking to you right now. It seems the free fall for the Indian currency, for the rupee, just continues unabated. Various factors really at play. Let's make more sense of the fall in the rupee. Let's get in our associate editor, Mayur who now joins us with more inputs. Mayur, we were thinking it was an all-time low that was hit by the rupee yesterday, but it seems the going is just getting worse from this point onwards.
Absolutely, and what's even more surprising is the fact that the government has not made any intervention as yet. It was largely anticipated on Monday itself when rupee crossed the 55 levels that the government will come up with some kind of an intervention. In fact, the government tried also, and it asked RBI to intervene, and RBI said that it's not in a position to intervene at this point in time. It's too late in the day for RBI to make any positive intervention on this matter. Subsequently, it was expected that at least some interim measures will be taken on an immediate basis, such as there could be some temporary ban on the import of gold, etc. But no measure has come in as yet. Our export sector, which benefits from falling rupee, but our export sector is in shambles. It's like it's caught in a chicken and egg situation, because the exports are practically not happening out of this country, and dollars are not coming in. So essentially, on net, if we see, the larger macroeconomic factors have started to play on the currency, and there does not seem to be any positive intervention coming in from the government. The government is also clueless as to what exactly it can do. Mind you, it's not correct on the government part also to blame it on the global crisis, because the kind of hit that rupee has taken is next only to it's only comparable to the situation in Greece, because on the other currencies have not taken that kind of a hit. So really a very grim situation, so much so that the oil marketing companies have now started to say, Nida, just a day after the hike, that now that rupee has slipped even further, even a 7 rupee 50 paise hike in the cost of petrol is not enough to offset their under recovery. So, well,
it's a vicious circle, isn't it, Mayur? But also, you know, as far as the government is concerned, you're telling us that they're not really aggressively stepping into this. What about the RBI? What is the role that the RBI can play in this crisis as we speak?
It's too late in the day for RBI to make any intervention, because on Monday the government sent across an SOS to RBI seeking the central bank's intervention in stopping the free flow of the currency. But RBI came back with the fact that our dollar reserves are less than 200 billion at this point in time, which is not even sufficient to pay for our next 6 months of imports. And there are certain very essential imports that we have to get into, without which we cannot do. We can for once ban the import of commodities such as gold, etc. But then there are essential commodities also that are imported. So we have to keep that buffer. And no, this kind of a situation has only happened in India in 1989. That was the last time around when we faced so much of a dollar crunch in our reserves. So the RBI has said that with no fresh dollar investments coming into the country, and the reserves dwindling by the day, in fact it's about 185 billion at this point in time, there's not much that the central bank can do. What needs to be done, Nida, is some boost given to the larger macroeconomic indicators of the country. We need to bring in investments, Nida. That's what everyone is saying. That's the only way we can bring in dollars in the country. We need to once again boost investor sentiment. We need to create that perception. Even the finance minister said that the fundamentals of our economy are strong enough. So even if it's strong enough, the perception of our economy has taken a major beating. You know, the one trigger after which the dollar investments have stopped coming into the country is the union budget. So there needs to be certain indicators set out on the macroeconomic parameters, which is not happening.
All right, so various factors at play that need a serious and a severe look into by the government right now. We'll leave it there with you, Mayur. Thanks for having joined us.